Hey everyone, welcome back. Today we're diving into something that might sound a bit dry at first.
All right.
Factoring.
Yeah.
But trust me, this could be a game changer for your business.
Absolutely.
Especially if you've ever felt stuck waiting on those customer payments to come through.
Mm-hmm.
You know, we're using a YouTube video by Lehnes.
Right.
He's a factoring specialist.
Yeah, factoring specialist.
To kind of help us unpack this.
Yeah, you hit the nail on the head there. We're essentially talking about a potential solution to a very common problem, cash flow.
Okay, so let's start with the basics.
Yeah.
What exactly is factoring? I mean, it sounds like some complicated Wall Street thing.
It's actually more straightforward than you might think.
Okay.
Imagine you're running a business and you've just delivered a big order. You send out the invoice.
Right.
But then you have to wait
Yeah.
sometimes weeks or even months to actually get paid.
Which can be a killer if you have bills piling up or you see a new opportunity, but don't have the cash on hand to jump on it.
That's where factoring comes in.
Okay.
You're essentially selling those unpaid invoices, your accounts receivable, to a third-party company called a factor.
Okay.
They give you immediate cash, and then they take on the responsibility of collecting from your customers.
So it's like, here's the invoice, you deal with collecting the money, I'm going to focus on running my business.
Exactly.
Okay.
Now, there are different flavors of factoring, but the one we're focusing on today, based on Lehnes' expertise, it's called non-recourse factoring.
So what makes non-recourse factoring different? Is that where the risk part comes in?
That's exactly it. With non-recourse factoring, the factor takes on the risk that your customer might not pay. In a standard arrangement, if the customer doesn't cough up the money, the factor is out of luck, and you're not on the hook.
That sounds like a pretty sweet deal for the business owner.
It is.
But wait, wouldn't that make factoring companies super picky about who they work with?
It absolutely does.
Okay.
They're going to carefully evaluate the creditworthiness of your customers, not just your business's overall financial history. Think of it this way. If your customers are large, stable companies with a good track record of paying their bills, a factor is going to be much more comfortable taking on that risk.
So if most of my customers are small startups with, limited financial history, factoring might not be the best fit.
You're catching on quickly.
Okay, good.
It all boils down to the level of risk the factor is willing to take on. But even if you're working with smaller clients, there may be other types of factoring that could still be an option.
Got it.
We'll get into those a bit later.
Okay, so we've got the basic idea of factoring and the non-recourse option. Lehnes actually works with a specific factoring company.
He does.
Called Versant Funding, right?
Yes.
Okay.
And while we don't want to make this a commercial for Versant, looking at their approach can give us some real-world insights into how factoring plays out in practice.
Fair enough.
Yeah.
So what sets Versant apart? What kind of benefits do they highlight in Chris's video?
One of the biggest selling points is speed.
Okay.
Versant prides itself on getting cash into their clients' hands quickly, sometimes within a week.
Wow.
Compare that to traditional bank loans, which can take months to process.
I can already see how that would be appealing.
Right?
Especially for a business facing a sudden cash crunch.
Absolutely.
But how does Versant move so fast?
Yeah.
I mean, don't they still have to do their due diligence?
They do.
Okay.
But remember, they're primarily focused on the receivables themselves, the invoices you're selling. They're looking at the creditworthiness of your customers.
Okay.
Not necessarily your company's entire financial history.
So it's more about who owes you money than how your business has performed in the past.
Exactly.
All right.
And that can be a big advantage for businesses that are newer or maybe going through a rough patch, but have solid clients.
Okay.
Another key point Chris brings up is that Versant doesn't require personal guarantees.
Wait, seriously?
Yeah.
That's huge.
It is.
So business owners aren't putting their personal assets on the line.
That's right.
Wow.
They want their clients to feel confident and secure, not like they're taking some enormous gamble.
Okay.
Of course, there's still a level of responsibility involved.
What do you mean by that?
Versant does require a performance guarantee.
Okay.
It means you, as the business owner, are vouching for the quality of the goods or services you've provided.
Okay.
So if the customer ends up disputing the invoice because the product was faulty, that's ultimately your responsibility to sort out, not Versant's.
That seems fair.
Yeah.
It's like Versant is taking on the risk of the customer not paying.
Mm-hmm.
But you're still accountable for delivering what you promised.
Right.
It sounds like a pretty balanced approach.
Right.
To further give their clients peace of mind.
Yeah.
Versant is very transparent about the whole process.
Yes.
They provide online tools so you can track the status of your invoices and see exactly where your money is.
Exactly.
So you're not left in the dark,
right.
wondering when you'll get paid or what's happening with your invoices.
Nope.
That level of control must be a big relief for business owners.
Absolutely.
And to top it off, Versant emphasizes personalized service.
Yes, they do.
Each client gets a dedicated account executive who works with them directly.
Right.
Helping them navigate the whole process and answer any questions. So it's not just a faceless transaction. There's an actual human relationship involved.
It is.
I'm sensing a theme here. Speed, flexibility, transparency, and personalized service.
You got it.
Sounds pretty good so far.
Yeah.
But what about the real-world application of all this?
Well, Chris shares some fascinating stories about how Versant has helped businesses in very different situations.
Okay, I'm all ears.
Okay.
Let's hear about these real-world cases.
All right. One example that really stuck with me was a consumer electronics manufacturer who had a major crisis on their hands. They'd shipped out a batch of defective products, which led to a flood of returns and damaged their relationships with some big retailers.
Ouch. That sounds like a nightmare scenario. What happened next?
They were in real trouble.
Facing
potential legal action and struggling to meet their financial obligations. Traditional lenders weren't willing to touch them.
Oh, wow.
But Versant stepped in and provided the funding they desperately needed to weather the storm.
So in that case, factoring was like a lifeline.
It was.
Helping them survive a crisis that could have sunk their business.
Exactly. And what's really remarkable is that Versant is even willing to work with companies in Chapter 11 bankruptcy.
Wow.
That demonstrates a level of commitment that you just don't see from most financial institutions.
Wow, that's pretty impressive.
It is.
So it's not just about helping businesses grow.
Right.
It's also about helping them survive and recover from setbacks.
Right.
Another example Chris shared involved a commercial printer that was looking to buy out a difficult seller-financed loan.
Okay, so they bought the business.
Right.
But they were stuck with a loan from the previous owner.
Yeah.
That was becoming a real headache.
Exactly. They wanted to get out from under that loan.
Yes.
But traditional banks wouldn't give them a new loan.
Nope.
Because their financials weren't stellar.
Right.
Versant came to the rescue.
They did.
And factored some of their receivables, giving them the cash they needed to buy out the seller and gain full control of their business.
Talk about thinking outside the box.
And I bet that move gave them so much more flexibility and control moving forward.
Absolutely.
And then there's the case of a security software company that needed to rebuild its finances after a failed merger.
So they went all in on this merger.
Yeah.
And it blew up in their faces.
Yeah, that's pretty much it.
They had poured all their resources into the merger and neglected their existing business. Which led to a drop in revenue.
Yeah.
And a messy financial situation. Traditional loans were off the table.
Right.
But Versant was able to provide the working capital they needed to get back on track.
These examples are really eye-opening.
They are.
They show that factoring can be used in so many different ways.
Yes.
From crisis management to strategic growth initiatives.
It's all about matching the right financial tool to the specific challenge at hand.
This is incredibly insightful stuff, but I know our listeners are probably wondering,
yeah,
okay, how much does all this cost?
That's a crucial question.
Yeah.
And we'll dive into the fee structure in detail right after a quick break.
All right, we're back.
Okay.
And I'm ready to talk numbers.
All right.
I have a feeling our listeners are eager to hear about the costs involved with factoring.
Yeah.
Okay.
Fees are definitely top of mind when considering any type of financing.
Okay.
With Versant.
Yeah.
It's actually pretty straightforward.
Okay.
They charge a percentage of each invoice up front.
Right.
And then there's an additional fee that accrues based on how long it takes the customer to pay.
Okay, so the longer the invoice sits unpaid,
yes,
the higher the fee.
Exactly.
Seems like a good incentive for customers to pay promptly.
You could say that, but let's break it down with an example.
Yeah.
So our listener can really grasp how this works.
Okay.
Imagine you have a $10,000 invoice. Versant might charge a 3% upfront fee.
So you'd receive $9,700 right away.
Correct.
While Versant takes on the task of collecting the full amount from the customer.
Yes.
What about that additional fee you mentioned?
Let's say it takes the customer 60 days to pay.
Okay.
And the additional fee for that period is 2%.
Okay.
That means when Versant collects the full $10,000, they deduct that 2%.
Okay.
Which comes out to $200.
So in the end,
yeah,
you'd net $9,500 from that original $10,000 invoice.
That's right.
Makes sense.
Yeah.
Now, I'm sure some listeners are thinking, wait a minute.
Yeah.
Won't my customers freak out if they find out I'm using factoring? Will they think my business is going under?
That's a common concern.
Okay.
But Chris Lehnes argues that factoring is way more commonplace than people realize, especially when you're dealing with large companies.
Right.
They're probably used to working with factors all the time.
Okay.
It's just part of doing business.
So it's not going to raise any red flags or damage those crucial customer relationships.
Right.
Okay, good.
And Versant even offers references from other businesses who have used their services.
Okay.
So potential clients can hear firsthand how it all works.
Yeah.
And put their minds at ease.
Speaking of putting minds at ease.
Yeah.
Earlier you mentioned that Versant provides clients with online tools.
Yes.
To track invoices and manage cash flow.
They do.
Can you tell us more about that?
Absolutely. It's a key part of their transparency-focused approach.
Okay.
They have a client portal where you can log in and see the status of all your factored invoices in real time.
Okay.
You can see which invoices have been paid, which ones are still outstanding, and when you can expect those rebates to hit your account.
So it's like having a constant pulse on your cash flow.
Yes.
Which can be super valuable for making informed financial decisions.
Precisely.
Okay.
And it eliminates that uncertainty of wondering, when am I going to get paid?
Right.
You have all the information right at your fingertips.
You also mentioned dedicated account executives.
Yes.
What role do they play in this whole process?
Think of them as your personal guide in the world of factoring.
Yep.
They work closely with you to understand your specific needs and tailor solutions accordingly.
All right.
If you have a question, a concern, or need something explained, they're your go-to person.
So it's a much more personalized experience.
It is.
Than dealing with a giant impersonal financial institution.
Right.
I bet that makes a big difference.
It does.
Especially for business owners who are new to factoring.
Definitely. It's like having a trusted advisor in your corner.
Yeah.
Someone who can help you navigate the complexities and make sure you're getting the most out of the service.
Now, we've been talking a lot about Versant, but I'm curious about the broader landscape.
Yeah.
Are there other types of factoring companies out there?
There are. And it's important to understand the differences.
Right.
You have smaller factoring companies that often work with businesses that have lower revenue, maybe under $500,000 annually.
Okay.
They might be a good option for a business with lots of smaller customers.
Okay.
Or those with less than perfect credit histories.
So they're filling a niche for businesses that might not meet the requirements of the bigger players.
Exactly. And then you have the larger, more established factoring companies.
Okay.
They typically have more capital to deploy and can handle bigger transactions.
Okay.
But they also tend to be more selective in their client base.
Right.
They're looking for businesses that are already pretty well established and have strong financials.
So where does Versant fit in this spectrum?
Chris describes them as occupying a unique space in the market.
Okay.
They have the resources of a larger factor, but maintain the personalized service and flexibility of a smaller one. Their focus on non-recourse factoring, especially for businesses that might not qualify for traditional bank loans, really sets them apart.
Sounds like they've found a sweet spot.
Yeah.
Catering to businesses that might fall through the cracks elsewhere.
That's a great way to put it.
Okay.
And their willingness to work with businesses in challenging situations, like those in Chapter 11 bankruptcy, really speaks volumes about their approach.
Okay, so we've got the different types of factoring companies.
Right.
But let's go back to that customer perception issue.
Okay.
I know some business owners worry that using factoring will make them look financially unstable.
I get it.
Yeah.
It's a valid concern.
Yeah.
But Chris emphasizes that factoring is so common these days, particularly among large companies, that it's really not a big deal.
Okay.
Most of them have suppliers who utilize factoring, so it's not going to raise any eyebrows.
So it's not like the old days.
No.
Where it was seen as a sign of desperation.
Exactly. And as we mentioned earlier, Versant is happy to provide references to address any lingering concerns.
Now let's talk about that performance guarantee again.
All right.
We touched on it briefly before.
Yes.
But can you explain what that means in practice?
Sure. It essentially means the business owner is vouching for the quality of the work or goods. Represented by the invoices being factored. So let's say you run a construction company and you send Versant an invoice for completing a major renovation project. If it turns out the work was shoddy and the client refuses to pay, that's ultimately your responsibility to resolve, not Versant's.
So it's a way for them to mitigate their risk.
It is.
While still offering non-recourse factoring.
Right.
They're taking on the risk of non-payment from a creditworthy customer.
Right.
But they're not taking on the risk of your business delivering subpar work.
It's about finding that balance between protecting the factor and providing a valuable service to the business owner.
It's about finding that balance.
Exactly. Now, while factoring can be a fantastic solution for many businesses, it's important to acknowledge that it's not a perfect fit for everyone.
Right.
There are potential downsides to consider.
You're right.
Yeah.
It's crucial to weigh the pros and cons carefully.
It is.
For instance, factoring can be more expensive than traditional bank loans. And those fees can cut into your profit margins.
Yes.
Especially if invoices take a long time to get paid.
That's a valid point.
Okay.
It's essential to carefully analyze the fee structure.
Right.
And compare it to other financing options available.
Another potential drawback is the loss of control over your collections process.
That's true.
Once you factor your invoices, that responsibility shifts to the factor.
And while Versant prides itself on transparency, it's still a shift in control that some business owners might find uncomfortable.
And then there's the notification aspect.
Yeah.
Some businesses might worry that their customers will react negatively to being notified that their invoices have been factored.
Right. It goes back to that perception issue we discussed earlier.
Exactly.
However, Lehnes argues that with large companies in particular, factoring is so commonplace that it's unlikely to cause any issues.
So for a lot of businesses, the benefits of factoring, like speed, flexibility, and peace of mind, will likely outweigh those potential downsides.
It all comes down to carefully evaluating your specific needs and circumstances.
Now, we've learned a lot about how factoring works.
We have.
The different types of companies and the pros and cons.
Yeah.
But what about the practical side?
Okay.
How does a business actually find a factoring company that's a good fit for them?
Chris offers some interesting insights into his own marketing approach that I think can be valuable.
For businesses seeking factoring services, he focuses on building relationships with professionals who work closely with small businesses, accountants, lawyers, business brokers, even bankers.
So people who are already having conversations with business owners about their financial needs and challenges.
Exactly. They're in a position to identify businesses that might benefit from factoring and make those connections.
It highlights the importance of networking and building relationships within your industry.
It does.
You never know where valuable connections and resources might come from.
Right. Now, let's talk about the application process itself. What kind of information do factoring companies typically require?
From what Chris describes, Versant's approach is refreshingly straightforward.
It is.
They're not as obsessed with traditional financial statements like banks often are.
Right.
You won't need to dig up years of tax returns or profit and loss statements. So no need for a mountain of paperwork.
That's good news for busy business owners.
It is.
Exactly. Their primary focus is on those receivables. They'll want to see a recent aging report, which shows all outstanding invoices and how long they've been due.
And they'll need a list of your customers so they can assess their creditworthiness. They're looking for evidence that your customers are financially stable and have a history of paying their invoices on time.
Chris emphasizes that Versant can turn around a proposal incredibly fast.
They can.
Sometimes within 24 hours. So if you need access to cash quickly, factoring can be a viable option.
It can.
And if the proposal is accepted, funding can happen as quickly as a week.
It's amazing how much faster that is compared to the lengthy approval processes often associated with traditional bank loans.
We've covered a lot of ground here.
We have.
Before we move on,
let's
quickly recap the key takeaways for our listener.
I'm all for a good recap. First and foremost,
All right.
factoring offers a valuable alternative for businesses that might not qualify for traditional loans or those who need quicker access to cash.
And with non-recourse factoring, you get the peace of mind of knowing that you're not personally liable if a customer doesn't pay.
Exactly.
Companies like Versant provide personalized service,
We do.
transparent fees, and online tools that empower you to manage your cash flow effectively.
That's right.
But remember,
Yeah.
it's crucial to weigh the cost and potential downsides of factoring before jumping in,
That's true.
and to make sure your business and your customers are a good fit for this type of financing.
That's a great point.
Okay.
So much of this comes down to finding the right fit
Yeah.
for your unique situation.
Okay, good.
Now, I have a question for you.
Okay.
Based on everything we've discussed, what aspects of factoring stand out to you as particularly valuable for businesses?
That's a great question. For me, the speed and flexibility are game changers.
Yes.
The ability to access cash quickly and tailor solutions to specific needs
Right.
is something that traditional financing often lacks.
I agree. And I think the fact that they focus on the creditworthiness of your customers, not necessarily your company's financial history, opens doors for businesses that might struggle to secure traditional financing.
Absolutely. And knowing that you're not personally on the hook if a customer doesn't pay, that peace of mind that comes with non-recourse factoring can be invaluable for a business owner.
Those are all excellent points.
Yeah.
Now, let me pose a final thought for our listeners.
Okay.
Imagine the possibilities if you could get paid for your invoices today.
Wow.
Instead of waiting weeks or even months.
Okay.
How could that transform your business?
Yeah.
Could you take on more projects? Hire additional staff?
Right.
Invest in new equipment or technology?
Those are some powerful questions to ponder. And that's what makes factoring so compelling.
It is.
It's not just about accessing capital.
Right.
It's about unlocking potential and creating new possibilities for growth and success.
Exactly. It really does.
It makes you think
Yeah,
about what you could achieve
it does.
if you weren't constantly having to play that waiting game for those payments.
It shifts your whole perspective on cash flow, allowing you to be proactive, seize opportunities as they arise.
Now, while we've talked a lot about the general benefits of factoring, I'm curious, do certain industries tend to benefit from it more than others?
There are a few that stand out.
Okay.
Manufacturing, distribution, and wholesale
Mhm.
often find factoring to be a natural fit.
Okay.
These industries frequently handle large orders
Right.
with extended payment terms,
Mhm.
making readily available cash flow absolutely essential.
That makes sense.
Yeah.
Having that cash up front keeps those production lines humming
Yes,
and orders fulfilled on time.
exactly. And it helps them manage inventory more effectively, too.
Okay. Yeah, that's a good point.
Another industry where factoring is quite popular
Okay.
is staffing.
Okay.
Staffing agencies often have to pay their employees weekly or biweekly.
Right. Yeah.
But they may not receive payment from their clients for several weeks or even months.
Right.
Factoring helps bridge that gap,
Okay.
ensuring they have the funds to meet payroll
Mhm.
and keep their operations running smoothly.
It sounds like factoring's a lifeline for businesses
It is.
with those kinds of payment timing mismatches.
You got it.
And then there are sectors
Yeah.
like transportation and logistics
Right.
where fuel costs and other operating expenses can be significant.
Yes.
Factoring provides them with the working capital.
Uh-huh.
They need to keep those trucks rolling and goods moving.
That's right.
So it's all about tailoring the financial solution to the specific needs
It is.
of each industry.
Precisely. Now, one thing that Chris Lehnes brings up that I found really interesting is the relationship between factoring and profitability.
Oh.
He suggests that factoring can actually boost profits, not just help maintain them. On the surface, that seems kind of counterintuitive. How does that work?
It comes down to leverage.
Okay.
Imagine this. You have a great opportunity
Okay.
to take on a big new project,
Uh-huh.
but you don't have the cash on hand
Right.
to cover the upfront costs.
Yeah.
Factoring lets you tap into your existing invoices,
Right.
get paid immediately, and seize that opportunity, even with the factoring fees.
Uh-huh.
If landing that project leads to a significant increase in revenue,
Yeah.
you could end up with higher profits
Right.
than if you hadn't used factoring at all.
It's like a snowball effect.
Yeah.
Faster access to cash can fuel growth,
Yeah.
which in turn generates more revenue and ultimately bigger profits.
That makes sense.
Yeah.
Of course, factoring isn't a magic bullet.
Right.
Businesses still need to be smart
Yes.
about managing their expenses, pricing their products or services competitively, and operating efficiently.
Yes.
Factoring simply provides the financial flexibility
It does.
to make the most of opportunities
Yeah.
and reach their full earning potential.
It's a powerful tool
Yeah.
when used strategically.
Now, you mentioned earlier that Chris Lehnes talked about some businesses coming to Versant after being turned down by other factoring companies. What makes Versant willing to take on cases that others might shy away from?
Okay.
From what Chris explains, it boils down to a few things.
Okay.
First, Versant isn't afraid of what they call tough deals. They're comfortable working with businesses facing challenges.
Yeah.
Whether it's recovering from losses, navigating a difficult transition, or even operating under Chapter 11 bankruptcy.
So they're willing to dig a little deeper.
Right.
And see potential where others might just see risk.
Exactly.
Second, they have a broad understanding of various industries and a willingness to look beyond traditional financial metrics.
Right.
They're more interested in the quality of those receivables and the creditworthiness of the customers than a company's past financial hiccups.
It sounds like they're taking a more comprehensive approach.
They are.
Yeah.
Considering the bigger picture.
Right. And third, Versant has the resources to support businesses through those tough times. They're not just providing a quick cash infusion.
Right.
They're aiming to build long-term partnerships and help their clients achieve lasting success.
That long-term perspective is key.
Yeah.
They're not just looking for a quick win.
Right.
They're invested in the success of their clients.
We touched on spot factoring earlier.
Yes.
Could you remind us what that is?
Sure.
And why business might choose that option?
Spot factoring is essentially a one-time deal where a business factors a single, usually large invoice instead of entering into a longer-term factoring arrangement.
Right.
It can be a good solution.
Yeah.
If you have a high-value invoice that you need to convert to cash quickly, maybe for a time-sensitive opportunity, or to cover a large expense.
So it's like a targeted approach to addressing a very specific need.
That's a good way to put it.
Okay.
However, Chris did mention that Versant typically only considers spot factoring for larger invoices, those in the $1 million range.
Okay.
For smaller invoices.
Yeah.
A more ongoing factoring relationship tends to be more cost-effective.
As we wrap up our deep dive into factoring, I think it's crucial to remember Chris Lehnes' advice about finding a factoring company that truly aligns with your needs and values.
It is.
It's not just about getting the lowest rate.
Right.
It's about finding a partner who understands your business.
Yeah.
Supports your goals, and provides the level of service you expect.
I couldn't agree more.
Yeah.
Factoring is a powerful financial tool.
Yeah.
But the key is to choose the right partner.
Right.
To make sure you're getting the most out of it and having a positive experience.
Well said.
Yeah.
Hopefully this deep dive has equipped our listener.
I hope so.
With the knowledge and insights they need to make informed decisions about factoring. And explore whether it's the right fit for their business.
Right.
Remember, if you're struggling with cash flow or looking to accelerate your growth, factoring might just hold the key.
It's definitely worth considering.
Yeah.
Thanks for joining us on this deep dive.
Yeah, thanks everyone.
Into the world of factoring.
See you next time.